If you're a veteran, you've been sitting on the sidelines waiting for the perfect moment to buy, waiting for rates to drop another 0.5%, or waiting for inventory to explode, or waiting for the media to tell you it's safe, just stop. The market has just shifted, and while you're waiting, capital is bleeding out of your bank account. That's not a prediction. This is data. Realtor.com forecasts existing home sales increasing 1% in 2026, reaching 4.1 million transactions as affordability gradually improves. Inventory is projected to grow by 3.6% this year, giving buyers more options and helping reduce the competitive pressure seen in recent years. Mortgage rates, guys, they're holding steady at the mid to high 5% range through 2026. This is the first real buyer's market we've seen in years, and most veterans that I talk to, they're still standing still. But Evans, I did 35 years in the Air Force, 13 years in law enforcement, former mayor of Sentiments in New Jersey. I'm an active real estate investor in single family and multifamily properties. I founded a low-cost, investor-focused property management company in Southern New Jersey, and I mentor veterans and first responders in real estate. I bought and sold properties in 3 recessions. I know what waiting does to your net worth. Like this video, subscribe to the channel, hit the notification bell so you don't miss the next video. All right, here's what I'm saying. You spent the last 3 years convinced that the market was going to crash. Rates are going to drop to historically low levels, but they went up and they plateaued. Then they dropped a little, then they climbed again. And now, after 2 years of watching rates bounce up and down between 5.5% and 6.5%, you convinced yourself that they're lower, that they're going lower or higher or sideways. Certainty that you know what comes next is keeping you from making the decision that you can make right now. This is a trap. That military thinking that got you through deployments, but it's costing you money in real estate. Look, we're trained to gather perfect information before we move. In the real world, that's called paralysis by analysis. In the military, it's called due diligence. In real estate investing, it's leaving money on the table. Here's the data. VA rates in July 2026 are holding at about 5.875% for a 30-year purchase. Compare that to conventional loans at 6.87. Compare that to where rates were in 2022 when they peaked above 7%. Compare that to where they could go if inflation accelerates or geopolitical tensions continue to increase. Mortgage rates today are not the lowest they'll ever be. They are, however, better than they were 2 years ago, and they are stable. Inventory's moving. In the last 3 years, you were competing against 47 other offers for a single-family home. You were paying 15% over listing price. You were waiving inspections. You were no contingencies. You were betting against the house itself. That market's gone. Inventory's up 3.6% this year. More inventory means fewer days on the market. Fewer days on the market means you can actually negotiate again. You can actually have contingencies. You can actually buy a property based on fundamentals instead of panic. But here's what kills me. I talk to veterans every week who tell me the same thing. They're waiting for rates to hit 5 again. They're waiting for inventory to double. They're waiting for the news to say it's okay. And I tell them the same thing every time. The news is full of crap. They're never going to say that. By the time the news says that the market is good, you've already missed the opportunity. You know how I know that? Because I watched it happen in 2012. I watched it happen again in 2016. I watched it happen again in 2021. The same vets who could have bought at 4% in 2020 spent 2021 and 2022 waiting and watching everybody else make money. And guess what? They're still waiting. And now they're out $20, $30, sometimes $50,000 because they missed the window. The real problem here is not the data. The data's fine. The data's actually good. The real problem is you've tied your buying decision to a rate that you may never see again. You told yourself that you'll move when rates hit 5. Or when inventory doubles, or when the Federal Reserve signals a rate cut, or when your job situation improves, or God forbid, until when I get the next promotion, or when your credit score hits 750 or 820, or when your down payment reaches $25,000. There's always another threshold. There's always something that's going to get in the way. There's always another reason to wait. It's an excuse. And while you're waiting, 2 things are happening. First, rents are increasing. Second, home prices are increasing. Both of those dynamics are moving away from you. So here's what I want you to understand. This is not a call to panic buy. This is not a call to throw discipline out the window and offer asking price at the first property you find. This is a call to make a decision based on your actual situation, not your prediction of what may be with rates next month. Because here's the hard truth. Nobody knows what the rates will do. Nobody. The Federal Reserve doesn't know what the rates will do. The Treasury doesn't know. The banks don't know. And you definitely don't know. In the middle of this video, I want to point you toward the War Room with David Perret. If you're a veteran and you're looking at this market and you want to move, but you're not sure about strategy, about offers, about multifamily, about self-sufficiency tests, about structure, the War Room is where you want to get that answer. Get into those conversations. Dave in that community has been through this cycle multiple times. And that's the resource that you need. And it really put me on the right track. So here's how you actually make the decision instead of just waiting forever. First, define your actual need, not your perfect scenario. You don't need rates to hit 5%. You need rates to be acceptable compared to the rent. Just do the math. And here's the math. If you're paying $1,500 a month in rent on a single family home, and a mortgage on that home would be $1,650 with taxes, insurance, and maintenance reserves, you've improved your cash flow by building equity instead of just feeding the landlord. Most veterans I talk to are sitting on $1,500 to $1,800 a month in rent, waiting for a scenario that is perfect, and that will never materialize. Meanwhile, at 5.85 or 5.875%, same property moves into a positive cash flow scenario if you buy it right. It's not speculation, it's math. Second, audit your down payment and liquid capital. If you're waiting until you have $25,000 to buy and then you currently have $8,000 in your bank account, you're waiting 2 to 3 years minimum. In that time, rents go up, prices go up, the window closes, and that down payment now needs to be $40,000, $50,000. But if you're a veteran with a VA benefit, you don't need to put anything down. You only need closing costs, which average $2,000 to $4,000. And if you have $4,000 in accessible capital, move on it. Not next year, this month. The barriers that you've constructed, they don't really exist. It's a mental block. Third, determine your property type and your location. You're waiting for the perfect property in the perfect location. But here's what actually works. You're looking for a functional property in a location where the price is below the regional average and the rent is at or above the regional average. You're not looking for the nicest property in the nicest neighborhood. You're looking for the first property that pencils out for you. You find 5 properties that fit that criteria, you make offers on 2 or 3 of them, one of them accepts, you close and move on. You don't wait for property number 6 to show up because it might be better. Property number 1 that pencils is all you need. Fourth, build your offer with margin. You're looking at a 2-bedroom, single-family home in New Jersey. Seller's asking $340,000. Comps suggest the property is worth $325,000. You have 2 choices. You can offer $340,000 or $350,000 because you're certain the property is going to be perfect, or you can offer $310,000 because the property is functional and the price is wrong. Veterans usually pick option 1. Investors pick option 2. Here's what happens. Seller rejects your offer at $310,000. You move on. 3 weeks later, property sits for another 30 days and it sells for $305,000. That's not prediction. That's how buyers markets work. If your offer gets rejected, that's not a failure. That's the market telling you that the price is wrong. Fifth, use your VA benefit as leverage in negotiation. The seller knows what a VA offer means. It means appraisal-based purchase. It means inspections are clean. It means the buyer can close on time with no contingencies. Veterans with VA loans close at a higher rate than conventional buyers, and that's a misconception. A lot of people think it's the opposite. You're actually a better buyer than you think, so use that when you're negotiating. Find an agent who knows what they're talking about. Offer less, but offer certainty. Most sellers will take slightly less money with zero risk over asking price with 2 months of uncertainty, wondering if the loan's going to get approved for the other person. Sixth, create a timeline, not a someday timeline that doesn't exist, a real timeline. You evaluate the property for 30 days, you make offers, you get accepted, or you don't. If you don't, in 30 days, you reassess. You don't wait 6 months and then wonder why nothing moved. You make a decision, you execute, and then you accept the result. That's discipline. That's how this works. Here's the consequence of waiting. It's the consequence of inaction. Rents increase, property prices increase, your capital loses purchasing power. You tell yourself you're being smart by waiting for the perfect moment, but you're actually just delaying a decision that's going to wind up costing you money every month that you delay it. I watched this play out dozens of times. The veterans who moved in July and August at 5.875% are now building equity. The veterans who told themselves they'd move when rates hit 5, they're paying a $1,600 a month rent on a home worth $340,000 that they could have bought for $2,000 a month, including taxes, insurance, and principal pay down. The buyer's market is here. Inventory is increasing. Rates are stable. Affordability is improving. This is not the time to wait for perfect. This is the time to move on good. So here's your decision framework. As always, use this checklist to determine whether you move right now or whether you actually do need to wait. 1, calculate your actual rent versus a potential mortgage payment and determine, are they close or favorable? If yes, check. Do you have VA eligibility or a down payment capital sufficient to close without borrowing from family or depleting your retirement account? If yes, check that block. Have you identified at least 3 functional properties in markets where rent to price ratio is favorable? If yes, check that block. Have you determined your maximum offer price and you've committed to not exceeding it regardless of your emotional attachment to a property? If that's yes, check that block. Have you connected with a lender who understands VA loans and has closed deals in the markets that you're targeting? If yes, check that block. Have you built a 30-day decision timeline with actual offers rather than just doing research? Don't get paralysis by analysis. If yes, check the block. If you've checked all 6, move on it. Don't wait till next quarter, not when rates drop now. If you checked fewer than 4, use the next 30 days to build that infrastructure. Then you move next month. Waiting beyond that is not planning, it's avoidance. Hey, if this helped you, do me a favor, like the video, subscribe to the channel, share this with someone who could benefit. Hit the notification bell so you don't miss the next video. Thanks for watching. That's all for today. I'm Bud Evans. Aim high, execute fast, and I'll see you on the next one.